round of applause for each of the gentlemen and the lady coming on the stage. Mr. Sunil Sanghai, Chairman, FICCI Capital Markets Committee, Founder and CEO, Nova One Capital. Mr. Vijay Chandok, Co-Chair, FICCI Capital Markets Committee, MD and CEO, ICICI Securities. Mr. Ashish Kumar Chauhan, MD and CEO, National Stock Exchange. Mr. Nehal Vora, MD and CEO, Central Depository Services India Limited, and Ms. Jyoti Vij, Director General FICCI. May I now humbly request Ms. Jyoti Vij, Director General FICCI, to carry forward the proceedings of the session. Thank you, ma'am.
Good morning, everybody. On behalf of FICCI, a very warm welcome to all of you this morning to the 21st edition of the FICCI Capital Markets event, which is CAPM. Very warm welcome to our special guest, Ms. Madhabi Puri Buch, the Chairman, Sebi, who's always, I think this is the third time, ma'am, in the row that we've had you here. And thanks a ton for listening to us and for many, and involvement in many of the regulations and the changes that you have been doing. We all know the capital markets has played a pivotal role in India's growth story, and of course, as I said, very thankful to the regulator for really effectively guardrailing the market and creating a robust ecosystem in a very, very balanced way. Agenda of the conference today is to reflect on the next wave of transformative changes in the capital markets that would help India achieve its full potential and move towards the Viksit Bharat goal that we have set up for ourselves. In the FICCI's tradition of presenting the green token of appreciation, may I request our President, Dr. Anish Shah, to present the green certificate. This is a grove of trees in your name, ma'am, once again, at a national park. And these can all be GPS tracked as well. I now request Mr. Sunil Sanghai, Chairman of the FICCI Capital Market Committee, for his welcome address. Sunil has been a friend, philosopher, and a guide, rendering great service to the community and through FICCI as well in this particular endeavor. Over to you, Sunil.
Chairman, Chairperson Sebi, President FICCI, ladies and gentlemen. I have 3 points to make. Ma'am, last evening we were in a conversation with Mr. Krishnamurthy Subramaniam, the former Chief Economic Advisor. He has written a book recently called India 800. In that he argues that our economy is going to be around $55 trillion once we achieve 100 years of independence. It's called Viksit Bharat. I don't want to get into the logic of that number, but it is important that if we have to become a Viksit Bharat, we need to grow at certain percentage, almost 8% compounded for the next 25 years, year on year. And if that were to happen, I think we as industry association, as FICCI, we will have a very meaningful role and important role really to play in that growth. And we think at FICCI, particularly for capital market, we have played that role very constructively and very extensively. Ma'am, with your help and with the help of the Sebi, we have been involved in every part of the capital market, whether by way of participating in the various deliberations or the membership of the committee, whether it's a primary market committee or a takeover committee, ease of doing business committee, and so on and so forth. There are many forums where we are actually participating and deliberating and adding our value. Last year, ma'am, you tried with a new idea called Industry Association, Industry Standard Forum, ISF. The idea was that the industry voice matters and the regulator should actually take into consideration while implementing a regulatory framework. We showed the lead. We took upon ourselves to really bring in all the industry bodies, and we formalized that ISF. It was supposed to be on the pilot basis. Now I'm glad that you are satisfied and happy, and you are giving it a formal structure under regulation, under Section 11 of the Sebi Act. We also want to compliment Mr. K.V. Kamath, who is chairing ISF, for providing the leadership on that. In ISF, we have been able to resolve and discuss many complex issues. As you know, we have given our inputs on complex issues like rumor verification. As I was walking into this room, I was informed that we have submitted our comments on LODR Regulation 30. We are working on ESG, that should be done soon. We are working on the debt market. We are working on KPI. This is music to the many bankers here. And so on and so forth. We are working on many things. Ma'am, one thing is clear. As an industry body, while we can work on these things, but it can't be one way. It always takes two hands, right? And we have got that support from Sebi, and therefore we could manage to do all of this. Otherwise, normally we would have put together a nice, lovely paper, a good print, and submitted to you. It would have gone somewhere in your chief of staff would have looked at your paper. It's because you took the initiative, engaged with us, put your own time, and we have had several deliberations. And therefore, we could really bring in the right spirit, industry voice. We make sure we do not bring in our conflicts. We do not bring in any specific issues. We bring in the industry voice. And because of that, actually, it has been a very extensive deliberation and constructive deliberation. And we could manage to actually do so many things in the market over a period of time. We will continue to do that. The list is long, but we are happy to keep adding to our plate more and more. One of the other initiatives which you had asked us to really focus on is the RegTech, where filing can be done by the corporate directly electronically, which can go into through the pipe, the exchanges. We provided the technology solution. I have given you the update. We are almost halfway there. Our deadline is March 31st. We should be on course to achieve our deadline. My second point is, as we all know, markets are very active, not only at all points high. Sebi is also very active. I'm saying this in a positive way. For the growth of the market, we do need discipline. At the same time, we also need a little bit of developmental area. Ma'am, I have two suggestions to make over there. While Sebi is active, we are beneficiary of that. I looked at the data. Last year, we had almost one consultative paper per week. But the important part is that a third of those consultative papers are for the ease of doing business, which means there is a proactive work happening towards bringing the cost of the business, making it easy for us to really execute. While we are doing this, we are focused on that. We should also look at, and I'm sure you are looking at, a little bit of developmental area. And there are a couple of suggestions which we have on that, apart from the deliberation which we had just now around the table. One part, ma'am, is that there is a lot of work happened on the primary market, the secondary market. I do say that our primary and the secondary markets are one of the best in the world. There is some work required on the corporate restructuring side. I think that is one area where the corporates are struggling. The corporate restructuring, mergers and acquisitions are taking a long time. There is a time value of money. If we do a deal and if it takes 2 years, probably the deal loses its value. There are ways in which we can shorten this. The regulations were framed when the regulatory framework was very different. Now the regulatory framework is very different. In the view of the new dynamics, I think we can look at some of these regulations. One example I would give on that. So for example, involvement of earlier High Court, now NCLT, can we move that to those powers for the listed company to Sebi. Can Sebi take on the responsibility of NCLT? By no means I'm suggesting that you should go for Sebi Bhavan 3, but the point is that in case of banking sector, those powers of NCLT are given to RBI, and RBI as a regulator acts as a court. Similarly, for the listed company, if we, in any case, every scheme goes to exchanges and then goes to Sebi. And thereafter, the shareholders meeting, the creditor meeting, that can happen electronically. And if the scheme is approved by Sebi, then we don't need to really go and stand in the queue for the NCLT. And that time is saved, and NCLT's time can be utilized for many other things which they have really in terms of priority. And the second and again important point, ma'am, that when we are looking at ease of doing business, we should also look at the difference between what is substantive and what probably has lost its meaning. In a lighter vein, I want to give this example is that there used to be a painting outside the door of my office, and we used to enjoy and look at that painting. One fine day, that painting disappeared, and there was a green board with a white paper stuck on it. And I asked what happened, and said there is an email which has to be put out there in the office, because if anybody has a complaint, they can read that email and complain to us. I said, we can put it up on the website. They said, no, this is the regulation. I actually asked that, is the height of that board and the font size is also prescribed? So far, not. But the point is, we are moving, this was valid at a point of time. Now probably it's lost its relevance. So maybe some of those regulatory framework which are not substantive, or maybe this has undergone a change because of the technology and the circumstances. I think that is one area which we can definitely look at. The third and the final point, ma'am, is that when we are, there are always two pillars, and when we are looking at the economic growth, the market plays a very, very important role. We have seen the examples of the other country. When they went through the similar phase of the growth, the market plays the backbone for their growth. For us also, the market is important. And we are really excited for the growth of this market. And therefore, we also want to do certain new things in the market. To do some new things, there is a flexibility required. I am a student of music. If I can take the analogy from the music, ma'am, when you play a raga and if you want to do a bandish, you need to do a bit of variation. Otherwise, the melody aati nahi. So, in order to do that, there is some flexibility. I totally understand there are two sides of the river and the water has to flow in between. With that clear understanding that there are boundaries, we follow the boundary, but some variation should be allowed so that the innovation can happen and therefore the market can keep growing and keep becoming mature. Before I close, I want to make two acknowledgements. One, our colleague Jyoti, she has been the really Atma of this conference and capital market for FICCI. She has been promoted as Director General of FICCI, so we compliment her and congratulate her. And I'm sure all of you will join me in congratulating Manu Bhaker. She brought in a youngest Olympian, brought in 2 gold medals for us. I welcome once again all of you. Ma'am, thank you for always joining this forum and providing your candid inputs and feedback. Appreciate your time. Thank you very much. Enjoy the proceedings of the day.
Thank you, Sunil. But in fact, you've been really the soul behind the event. So thank you so much for making many useful recommendations as well. Dr. Anish Shah, our President FICCI, for his theme address, please. Over to you.
Good morning. On behalf of FICCI, it gives me great pleasure to welcome all of you today. And a very warm welcome to Ms. Madhabi Puri Buch, Chairperson of Sebi. We are honored to have you today. Also a warm welcome to Shri Ashish Chauhan and Shri Nehal Vora. Thank you for joining us. This is the 21st edition of FICCI's prestigious Capital Markets Conference. And as we start the third decade, we are in a position today in India where we're on a cusp of breakout growth. We saw the budget recently, and it continues a development agenda that is very focused on a path of Viksit Bharat. And Viksit Bharat has a set of goals that are very ambitious. Over the last 3 to 4 years, government capex is driving the development agenda. Private capex is lagging behind. And it's time for the private sector to step up and contribute to that growth, to benefit from that growth. And for that to happen, we need a very vibrant capital markets. In India, we already have a market that has grown dramatically. Earlier this year, we became the 5th largest in the world with an equity valuation of 5 trillion. And there are many, many milestones that we have hit. I'll read out some of them. More IPOs than any other market. Achieved T+0 settlement for limited scrips. Simplification of delisting norms, linking of rumor verification with material price movement, and I'll come back to this later. Facilitation of small and medium REITs. Simplified disclosure requirements for FPIs. Greater adoption of technology and analytical tools. And the AUM of the Indian mutual fund industry now stands at 61 trillion Indian rupees, more than a 6-fold increase in 10 years. So to make this happen, there are 2 things that are required together. First is the ease of doing business. And this is one area where we would like to thank the regulator for the openness to listening and to having a dialogue. Yes, we will get a direct answer in specific cases where our asks are not fully thought through, but that is what a regulator must do. And in a number of cases, we have received very open reception to the rationale that we've laid out. And I come back to what I said earlier about market rumors. While there was an initial view that every rumor must be responded to by companies, in a representation that we had taken from industry, the regulator was very open to understanding the issues that arose from that, and in fact set up an industry standards forum, which we do across multiple industry associations, to bring together the voice of industry to say, how do we make implementation of some of these norms easier in a way that it does not result in consequences that were not intended with the regulation. And I'd like to thank Sunil again for his leadership in driving that, and for Mr. Kamath to chair that, because that has made a big difference, and we are starting to see a number of implementation measures being tailored in a way where there are no unintended consequences of what was desired in the regulation. To establish a robust capital markets, it's not just about ease. It's also about ensuring that the guardrails are in place so that we don't fall off the tracks, especially as we're going in such a fast pace. And those guardrails are essential for protection of individual retail shareholders, as well as for protection of the system as a whole. And that is where sometimes the regulator's role comes under a lot of scrutiny and angst from many of the market participants. But that is an essential requirement, because if we don't do this well, collectively we will fail. And the balance is essential. So in that context, as an industry, FICCI will play a role to ensure that we can take industry views, have that discussion with the regulator on a consistent basis, and work across industry groups to ensure that we have the right outcomes that make sense for the industry overall and for the economy overall. With that, I'd like to thank the Sebi Chairperson once again for joining us. You have a difficult role, ma'am, and we appreciate how you've taken up that role. You appreciate your being direct with industry on things that may not always make sense, and the openness to listening to things and adjusting where required. Thank you.
Thank you, Dr. Shah, for outlining how the capital markets have been successfully bolstering the economic growth and channelizing the capital creation. Thank you for that. I would now invite Mr. Nehal Vora, MD and CEO CDSL, for the special address. With over 25 years of extensive experience in the Indian capital markets, Mr. Vora's leadership has propelled CDSL into the current stature that it is, and with the distinction of being the first and only depository listed on a stock exchange in Asia. Over to you, Nehal. Thanks.
I wish you a very, very good morning. First of all, I'd like to thank FICCI for really inviting me and CDSL to this very august forum. Respected Sebi Chairperson, Ms. Madhabi Puri Buch, my colleagues on the desk, and also distinguished guests of the desk, I would like to say on this very occasion where we are talking about Viksit Bharat is really a true beacon of hope and aspiration for centuries for India. India has been that one civilization which has given hope to the world, has been in the world and given economic activities for many, many centuries. Our developmental journey has accelerated at an unprecedented pace over the last 10 years especially. But if I go back to 1992 when Sebi was created, I think the Indian securities markets probably belong to a different country and not India, what we see now. It was a trust-based, physical-based market ecosystem. And really, Sebi has taken that heavy lifting of transforming the securities market into an ecosystem which is completely electronic, technology-enabled, and equal access to all. The reforms right from floor-based trading, which existed for more than a century then, to transition into a completely electronic markets, was something extremely out of the box. Segregation from moving from an account period settlement, again, which existed for over a century, to a rolling settlement. Segregation of the derivatives market from the cash market. The KYC registering agency. The setup of depositories and the entire process of moving physical shares into demat shares, margin pledge, etc., and the list just goes on. But I think one of the most important components which Sebi has created, which is going to really create the Viksit Bharat from a securities market standpoint on a sustainable basis, is a creation of market infrastructure institutions, where Sebi has actually delegated a lot of its regulatory responsibilities to a group of closely regulated entities, which are the stock exchanges, commodity exchanges, clearing corporations, and depositories, which are collectively called the market infrastructure institutions. And we as MIIs really have a role to partner with Sebi to build that trust in the securities markets. In terms of what we have already achieved, our total market capitalization stands at a staggering $5.2 trillion as on June 24. But more importantly, the MIIs have reached to about 99% plus PIN codes of the country. The exponential rise of Demat accounts has been spoken about in media quite a bit. But what I feel is a more important component which needs to be really focused upon is not the growth of Demat accounts, but is also the extent in which it has grown, where more and more tier 3, tier 4 cities are contributing more to this growth. What does this lead to? That this is really the true tomorrow of India in a Viksit Bharat. We must also talk about a very, very important reform which Sebi has earmarked is T+0. I think it's the Chandrayaan moment of securities market where nobody dared to go in the world. Sebi had the gumption and courage to move forward on an optional basis on a T+0. And I think that deserves a great round of applause to the great effort which Sebi has done. Being a market infrastructure institutions, we are used to a lot of committees internally within the MII and also within Sebi. And therefore, a common term which we always are used to is the TOR, or the terms of reference. I have kind of rephrased that to bring home a very important point. I call it the TIR, or the terms in reference for Viksit Bharat for securities market. And TIR is an acronym on which I would like to speak on. T stands for the technology to build trust, the technology to build equality, the technology to build reach. I think what we have seen today, till now from 1992 till 2024, is that technology has been able to create and fulfill the aspirations of not only tier 1 citizens of India, but even the tier 4 citizens of India to participate in mainstream markets and get their cash and securities on a T+1 basis or even on a T+0 on an optional basis. This I don't think is available in any other market. And therefore, there is a need for that responsible technology where it builds trust, where it builds equality, where it builds oneness, because it's finally that Akhand Bharat which is going to lead to a Viksit Bharat. The second word in that acronym is I, is investor education. I think as technology is going to give access to a lot of platforms, a lot of products, it's important for every investor to understand what it should really be investing in. I ask a rhetorical question to myself every day. Can I trust myself in the present so that my future is safe and secure? I'm asking that same question to you. That every investor needs to ask that question first to itself. That does it have the right education to invest in its hard-earned savings of the present so that its future is safe and secure? Is it choosing the right products, the right platforms, so that it doesn't have to repent in future? And therefore, there is a need of a collective approach. And I would really call upon FICCI in association with everybody, and MII, especially CDSL, is willing to partner with them besides what all we do in promoting this investor education in a simple language. It need not be only in English, it needs to be in the 23 languages which India speaks. The third part of the acronym is R, is the right conduct. So whilst there is education, there needs to be a promotion of right conduct leading to wealth creation. What we see, I know India, we like 2020 cricket and it's a great fever. But the true test is only in a test match, which is long term, which faces a 5-day where there are no restrictions of overs, there are no restrictions of power play, etc. And despite that, if you can perform, then you have truly won the test of life. And that's where I would really encourage that there has to be a forum which not only promotes the right education, but also promotes the right conduct, which has created the right wealth on a long-term sustainable basis. With this, I would just like to end with a Hindi couplet, which is an anonymous Hindi couplet, which says, Mera ho kalyan, tera ho kalyan, sabka ho kalyan, kalyan ka bhi ho kalyan. Thank you. Jai Hind.
I think a strong ecosystem is what you talked about, and that is what can help, like you said in your Hindi couplet, will benefit to all of us. And I do take your suggestion on the investor education. We'll be most happy to collaborate and really take this forward. It's a subject very close to our hearts. I turn to now Mr. Ashish Kumar Chauhan. Before that, actually, we have a publication that I would like ma'am and everybody present on the dais to kindly unveil, and then we'll move to the next. This is actually a work done by a lot of our committee members on various topics that help the capital markets. I now invite Mr. Ashish Kumar Chauhan, MD and CEO NSE, for his keynote address. Mr. Chauhan, as we all know, is a technocrat and one of the founders of National Stock Exchange of India, and undeniably the stock exchanges are very critical pillar, which we are getting a lot of support from you, Mr. Chauhan, on a lot of activities. A very warm welcome to you, and over to you for your address.
Thank you, respected Chairperson Sebi, Srimati Madhabi Puri Buch, Shri Nehal Vora, Shri Anish Shah, Shri Sunil Sanghai, Shri Vijay Chandok, Sushri Jyoti Vij, friends, ladies and gentlemen, it's a pleasure and honor to be in front of you once again for this FICCI CAPM, as I call it. We were taught capital asset pricing model in schools, in MBA schools. Now FICCI is teaching us CAPM in a different way, but it's a good way, so keep it up. Yesterday, Nifty reached 25,000, which is a landmark, so give us a big hand, all of us. It's a journey of last 30 years since NSE was set up. It's actually, we are passing through 30th year of NSE setup. NSE's operations began on equities on November 3, 1994. And in wholesale debt market in July, April to July, somewhere there was a beta period and stuff like that. But effectively, when NSE started in 1994, we had total market capitalization of around 4 lakh crore. Today, we are 450 lakh crore, so 112 times. There is no other index in last 20, and of course Nifty started on April 22, 96, but with a base of November 3, 95. Just to remember that November 3, starting off NSE on Diwali day, so that's why I kept it on November 3, 95 base. It was 1,000. Today it is 25,000. If you add that little bit of dividends the companies give, it would be probably 28 to 30,000 rupees. And no other index in the world, even in dollar terms, take S&P 500, no other index has given this kind of returns in dollar terms also. So this is literally, I used to say that America needed Warren Buffett, India needs Nifty. So we have come a long way, but we have a longer way to go. This is, for me, just the beginning. And since we have reached that mark, I thought we need to just mark the occasion. And when NSE started, I vividly recall, we had probably 10 to 20 lakh investors, maximum. We were double counting, triple counting, still we wouldn't reach that number. Even 6 years back in a budget discussion, one of the channel anchor told after the budget discussion, now that budget is good, few lakh investors in India will be happy. And I said, sir, 2 crore investors is not few lakh. But today, now we have reached 10 crore direct investors. That is 20% of India's all households directly investing in stock markets. Directly. In addition, of course, mutual funds and stock markets both have literally the same number of, or rather the same cohort which invests. But if you add EPFO and also NPS, the numbers will actually swell to probably 25 crore direct, which is almost touching 100 crore people because every family has 4 or 5 people. So literally, the Indian stock markets are reaching people and not due to government compulsion. There is no Jan Dhan Aadhar mobile, and I wouldn't advocate. Many people want to advocate Jan Dhan Aadhar mobile, but this is a risk asset. Let's not do it. Let people actually come in on their own and invest only small portion of their assets. Not too much, but invest. Not trade frequently. Morning buying and selling in the evening is not called investment, right? Although television anchors want us to believe that, please don't believe that, right? Neither trading in derivatives investment. So small investors should stop trading in derivatives. But having said that, of course, Sebi has now taken significant cognizance of the fact and they are going to take actions. They have already issued consultative paper and after all our replies go back, they will take their final call. But whatever the case today, we have come a long way. 10 crore investors investing $5.5 trillion. After US, China and Japan, we are the 4th largest market capitalization having country. Although Anish bhai said we are 5th largest because the news has not reached Bloomberg that Hong Kong got taken over by China in 1998. So they continue to show Hong Kong even now as separate for certain purposes, including stock markets. But broadly speaking, it's part of China, at least last I saw. And even now, even Hong Kong has become much smaller than our market cap. But that is, again, just to tell you that this is where we have come is just the beginning. The way the stock markets work in India, many people think we are dazzling the world with our technology of transaction processing. Stock markets has largely 2 parts, transaction processing and corporate governance. The transaction processing framework of India is now the best in the world by miles in stock exchanges. There is no similar exchange in the world. On a good day, NSE gets more than 20 billion orders in 6 hours, 15 minutes. That is literally 15 to 16 orders per human being in India per day. And response time is in microseconds. 1 second has 10 lakh microseconds. So we are, and on a good day, we trade 290 million, that is 29 crore trades. There are no similar trading systems, clearing systems, settlement systems in the world. But that is not why India's stock market is so good. It is because of the corporate governance. Corporate governance, when many of us sitting here joined the markets, even annual reports did not come in time. Many companies used to ask for 6 more months, 12 more months kind of things that they were given those dates. Today, quarterly results are must. We have majority of minority. We have many such things, all pari passu shares. People who blame us saying that our corporate governance is not so good have differential voting rights for different shares. They have golden shares. They have all sorts of things, including fractional shares, which are actually, in a way, slightly different from what it is made out to be. But effectively, this is the best market for non-insider shareholders in the world by miles. There is no similar market in terms of corporate governance. And why there is, again, if you look at it, there is an economic theory which says that countries having low per capita income cannot have a well-functioning capital markets, because low per capita income people cannot save much, and if they save, they don't trust their brothers. How will they trust some other industrialists sitting in some other place? But today, 10 crore small investors sitting in Jorhat, Dibrugarh, wherever, there are only 30-odd pin codes in India which do not have investors. Today we are getting orders from Andaman Nicobar every day. There are only 30-odd zip codes where there are no investors. Most of them are airports where nobody stays for the full day. There are small people investing their hard-earned 1,000 rupees, 2,000 rupees into a company in Salem from Jorhat, Dibrugarh, Srinagar, wherever, knowing reasonably well and having trust in India's parliament, India's judiciary, India's policymakers, India's regulator, India's exchanges, but more importantly, India's entrepreneur, that person will work hard for his or her 1,000 rupees, and whenever the dividend comes, he will not siphon away. That is the trust of Indians in its entrepreneurs. And it has gone up so much in last 30 years since NSE was set up, that today we have reached 4th largest, and we have belied the economic theory that poor economies do not have well-functioning markets. These are trust markets. What we manufacture together as regulators, as judiciary, as parliament, as exchanges, and also as entrepreneurs is trust. And trust is very difficult to get, but very easy to fritter away. So my request is, today we are living in what, as Charles Dickens said, we are living in the best of times, but we are also living in, and so whatever the euphoria, we have to ensure that all the regulations that are required to be put in place, we must put in place, and we must all adhere and comply continuously and continue to improve to ensure that this market, which is so precious for India's future growth, if we have run from 4 lakh crore to 450 lakh crore in 30 years, next 30 years can be even larger. We cannot fritter this away. This market is very, very precious for India's growth. For India has a chance to become rich before it becomes old. And this is the place from where India will become rich. India is now investing in its own productive capital, that is companies, and that's where, for me, FICCI doing the CAPM is apt, because the companies have to also adhere to the rules of the game, the brokers, the investors, all the intermediaries, mutual funds, stock exchanges, and everyone have to ensure that we follow the rules and we continue to improve the rules. With that, thank you very much.
Thank you so much, Ashish, and tremendous work of National Stock Exchange, which we're all seeing, and very, very proud of what NSE and Nifty has been a testimony of India's capital markets growth. Time to turn to our chief guest for her views and insights, and I would like to acknowledge here that Chairperson has always been extremely supportive of initiatives that are aimed at strengthening the resilience of the capital markets, and truly also appreciate the manner in which you've been able to really balance the objectives of market development as well as the regulation. And we do remember 2 years back, ma'am, you did talk about how you're willing to, be consultative with the industry on every rule and regulation. And the industry standard forum that you set up is truly a testimony of that, and a great regulator industry partnership that has been created. So we look forward to your views, ma'am, and a big round of applause for the chairperson, Sebi, Ms. Madhabi Puri Buch.
A very good morning. A very good morning to everybody. It's a pleasure to be here. I must say that for me, when I think of Viksit Bharat, this is the face of Viksit Bharat to me. You have a country and you have citizens where there is a girl child, there is education, there is inclusion, there is technology, and there are all those smiles which reflect the hope for the future. So to me, this is the face of Viksit Bharat. An extremely important pillar for a Viksit Bharat is the economy. The real economy, financial economy, the markets. And an important driver of all of that, of course, is the way in which our entire market ecosystem works and functions in a well-balanced and a very, very progressive way. The most important part or the role of the capital markets is capital formation. So it is a matter of great pride to us that in the global league tables, India, first of all, ranks number 1 on the total number of IPOs and issuances anywhere in the world, with a very, very significant, number there. It's almost one every trading session, almost. In terms of the amount of capital raised, in terms of stock exchanges, we are 5th. But if you look at us from a jurisdiction point of view, we are ranking number 3. The quantum of funds raised is still to catch up with the larger economies, that is the US and China. But if you look at the growth rate, look at the 49% growth rate, compounded growth rate over the last 5 years. There is nobody equaling our growth rate there in any significant manner. So this is a matter of great pride for us that we are part of this ecosystem, which really has allowed us to put our stamp on the global stage. One of the things that at Sebi we are very conscious about is that the focus we need to bring to clearing applications for capital raise should be brought to a minimum. We've been tracking this for about 11 or 12 quarters. And as you can see, for us, the important thing is not that there is pendency. In fact, pendency is good because it means that there is more and more activity in the market. But what we track like a hawk is the aging. So you can see that starting from March of 2022 to July, which was day before yesterday, end of July, what is the way in which we are working to bring the aging of applications down? And I had mentioned this the last time I spoke at this forum, that unlike the classical way in which a government system measures the time taken, which is normally computed from the date of receipt of complete information, right? And I'd mentioned then, I remember a lot of people laughed. I'd said that, it's very easy for a government officer to reset his or her clock, because when you're running out of time, you simply ask one more question. It doesn't matter what that question is. You simply ask a question and you get to reset your clock and say, I haven't received complete information. So in Sebi, we don't actually allow that. This data is from date of first application. So the whole process of streamlining this approval process so that we are able to facilitate faster capital raise, particularly when the markets are doing so well. It is very important for the economy, for corporates to be able to raise money at a time when markets are conducive. So really, the greens and the yellows you're seeing in the July are where we are comfortable, because from date of first application, including all the interaction with the company and the merchant bankers, is where a bulk of our applications are. Anything exceeding 3 months, and we have 8 of those, is largely on account of either we don't have, or the company doesn't have regulatory approvals yet in place, or that there is a judicial intervention, or that there is a significant non-compliance with regulations in the past. For instance, deemed public issue kind of violations in the past, which is resulting in those applications going beyond the 3-month number. What we have done, because it is important for us that troublesome applications do not block the entire system, so we have introduced a mechanism of return of documents. Now, this is something which, interestingly, I was very amused to read in some newspaper that some market participant commented that, Sebi can return a document even if, the requirement of the document is in active voice, but it is in passive voice, and passive voice is active voice. I was quite amused to read that, because in actual fact, the reason why documents are returned is the following. You can see here that where the observation letters have been issued, the number of 65 there, the documents returned 16. Imagine we could have approved 16 more documents, okay, or withdrawn, so another 20. So almost 30% more we could have approved, but what came in the way? What came in the way was that a director of the merchant banker was allotted shares in the company 2.5 months before the document filing. So he's directly conflicted, right? This is not active and passive voice of the document. This is because a director of the applicant company is already under investigation by Sebi for fraud in a previous IPO. This is not active and passive voice of the document. This is because the document has internal inconsistencies. Ek jagah number kuch aur diya hai, same number in another place is completely different. So even that much due diligence has not happened in a document where you have internal inconsistencies. You have documents where after days of reading the document, you can't figure out what is the company going to use the money for. Okay? This is not active voice and passive voice. We have large number of documents which are just incomplete. So the whole issue for us is we worry about that the applicants who are actually extremely diligent, who put up extremely good quality documents, and there are a large number of those, unfortunately get stuck in the queue behind the ones which have all of these complications. And we believe that it is not right, because we as a regulator are duty bound to process documents on a first come first serve basis, right? We cannot show preference for anybody. So the only mechanism we had which we could exercise was to say, if this is all because you are not able to move the document forward, problem is not in our processing. We will return the document to you so that we unclutter the path, and very good applicants who are waiting behind are brought in front and cleared as soon as possible. So it is exactly to facilitate faster processing of high quality documents that we are being constrained to return documents which have all of these fundamental issues, and I assure you we never return a document for active or passive voice of the document. Sunil mentioned about the rag and the bandish. I completely agree with him. And I think that the beauty of innovation often lies in the bandish. It's not that you're going to invent a new rag from somewhere. So we are extremely supportive of that. The only little bit of a problem we face sometimes is that what is presented as a bandish, actually wo rag hi badal rahe. So they want to present it as one rag, lekin wo bandish laake wo pura rag hi badal dal rahe, which of course is something that we are very watchful about. But one of the innovations that you are going to see very soon, we've already taken it to our advisory committee, and I'm told that it got a very, very positive response, is a new innovation brought forward by the Sebi team, which is a combo product of a rights issue and a preferential allotment. Now, what this is going to achieve is something quite transformational, as I say, get the best of both worlds. So you get the best of a rights issue, you get the best of a preferential allotment. What does this mean? It means that, first of all, the entire end-to-end process can be completed in 23 days as compared to even a preferential allotment, which the industry loves because of the speed, takes 42 days. So this innovation is actually going to almost halve the time that you need, even as compared to the fastest route available today. So this is really an expressway which we are facilitating. Now, how is this being facilitated? Is because we are saying that for an existing company that is going the rights way to preferential allotment, there is really no need for Sebi to get in the way. Anyway, the company is there, it's a running company, it is making all disclosures. The only thing required is to say what are you going to use this money for, which is hopefully just 2 pages. So there is no need for Sebi to come in the way at all. So we are eliminating the Sebi step. Then we are saying it's only a 2-page document saying why you're raising money, why do you need a merchant banker? So no compulsory merchant banker. So with all of these things, the whole objective is that we should now create this equivalent of Eastern Express Highway to be able to do fundraising in a way that is fast, cost-effective, and at the same time fully protects the investor, because it's the right way to a preferential allotment. So this combination product, which we will be taking to the board, PMAC has already looked at it? Okay, so we're going to bring out a consultation paper on this. So I think this is going to be a really interesting bandish, and we hope that you enjoy the variation. The second innovation, which is going to be coming soon to a cinema near you, is something that we are calling a demystified offer document. I'd just like to call out a comment that was made to me as I was walking from the main hotel over here. The CFO of a recently listed company said to me that when they started on the journey, they were really frightened, and everybody had told them that this is really a scary process of getting listed. And he says, having been through it, I don't think that is actually the case, right? So this is, I was delighted. I asked his permission to quote him. The point is this. I think the important phrase he used was, if you have nothing to hide, right? Is that what you said? If you have nothing to hide, it's really simple. Now, what is it we are trying to bring as an innovation to the market is something that we are calling a demystified IPO document, because we think too much mystique has been created around this thing called DRHP and, this whole process of getting listed. It actually isn't that complex. So what we are creating now, and always in consultation with industry, there's a working group that's working on it, is to create a template fill-in-the-blank IPO document which says, you fill in these blanks. If you have any complexity in filling it up, and there is an if, but, actually, and some complexity like that, there is a separate column there in which you articulate that complexity. Right? Now, with this, we believe that the document will be precise. There won't be a lot of unnecessary angrezi all over the place. It will be meaningful because it says, here are the 50 things which are necessary for an investor to make a decision, and that's what it is. And any variation or bandish to the rag is explained separately. So it's like saying, I know this is the standard. Now anything which is slightly different, I have an ability to look at it. So first of all, it will smoothen the processing time in Sebi itself. We are hoping that we will be able to bring down the approval time even lower than where we have today. and at the same time, it will demystify the entire process of filing and going through a listing process. So we hope that this new demystified filing document will make life a lot easier for all the young companies waiting to list. Amongst the companies that have already recently listed, it's been an area of concern for them, and we've had a lot of discussion and learning as a part of approving those IPO applications in terms of the KPIs that we require loss-making companies to disclose in their document. Given that there was this concern and angst about it, we have now, gone to the doctor with this, and that doctor, of course, is the Industry Standards Forum. So, I must acknowledge that this joint forum of FICCI, CII and ASSOCHAM, which was initially spearheaded by FICCI, so really many thanks that the entire startup of the forum was really thanks to FICCI. And of course, we have what is in Sebi referred to as the Sherpa of the forum is Mr. Sunil Sanghai. So he has no official designation, but he is the Sherpa. And the Sherpa is extremely important in getting us to the summit. So we have now referred this matter of KPIs to the Industry Standard Forum, and we have shared what are our concerns, and the industry has shared what are their concerns, and we believe that a very good win-win situation is going to come out and emerge from this very soon. I believe Mr. Mohandas Pai has said just another month and we should be there. So this is again something that through mutual discussion, mutual respect, mutual trust, we believe that there are solutions out there which are possible, so long as we ensure that we speak to each other in an environment of trust and in an environment where we are aligned with the larger objective of investor protection. Why are we so confident that this will work? Because, as has been mentioned earlier, the Industry Standards Forum has really worked for us, and we had started it on a pilot basis, and we recently took it to our board, the Sebi board, and gave them the structure that we are now going to be formalizing. So again, this will go into public domain very soon. We've taken that framework and we are again consulting with the Standards Forum to say, give us feedback whether you think that this framework works or not. So we will very soon be making this an integral part of the regulatory architecture, and the pilot status will move to something which is more formalized because we believe that it really works. It's worked amazingly well on the ESG norms. We now are expecting a submitted, about to come, all closed. I think the I's are being dotted and the T's are being crossed, and Mr. Mukundan has been really amazing in driving that whole initiative. So making it easier in terms of disclosure under BRSR. As we were discussing, under LODR, the disclosure norms under Section 30, signed, sealed, delivered, we're going to be taking it to our next board, September board, in order to get our approvals for that. So hopefully a lot of the debate, discussion around ongoing disclosures by listed companies should be hugely simplified through this process. The rumor verification that was talked about was the first major success, something that comes in the media. Is it a fact? Is it fake? Today the companies are regularly reporting, and of course the standards have now come into being. So again, making life a lot easier for listed companies. Apart from listed companies, the entire market ecosystem also has a large number of regulated entities, right? The intermediaries. So what we have been trying to do again is to ensure that the registrations of these are speeded up so they can get going with their business as soon as possible. You saw that there was, one is the pendency was a bit low, there was not that much activity. As you can see, just in the last 1 month, we have got 118 applications for new registration. So the entire industry is becoming so vibrant, and so much of, we hope, job creation is happening on the back of all of this. And we are working very hard to ensure that this is something which is again kept well under control. The last 4 that you're seeing there, the blue and the grey, is largely on account of the I think the ESG rating providers, because it was a totally new concept, and therefore the applications itself, when they came, were incomplete, but we accepted them because there was a deadline for their submission. So it's going to take time because the applications right now are actually incomplete with our blessings. So the whole idea is that we should ensure that people who are coming into the industry, who are wanting to be a part of this ecosystem and create jobs in this ecosystem, are facilitated to get going with their business as soon as possible. Not only at the time of entry into the ecosystem. We have been very cognizant that the entire life cycle of somebody who comes under the purview of Sebi, their life should be made easier right through their life cycle. And in order to do that, we had set up 16 working groups because we have very large number of stakeholders, right? You have the exchanges and the clearing corps depositories on one side, you have the brokers and DPs, you have the listed companies, you have the asset management companies, you have the alternates. We have a whole lot of different stakeholders, the FPIs. So we had 16 working groups set up for ease of doing business. Out of the 339 recommendations received, the total accepted number are 66. So 67% have been accepted. They are in various stages of implementation. 59 already implemented, September board of Sebi 126, and to be taken up maybe perhaps in the subsequent December board. So 2/3 already accepted. Of the rest, some are under process. They're still, we're trying to figure out what exactly we can do with them. And even out of the 16% that have not been accepted, you're seeing the big number is coming from debt and hybrids, because almost over a third of those 43 actually are not in our jurisdiction. So actually we should be in this slide actually removing them because we have no jurisdiction over them. They come under the jurisdiction of either some government department or another regulator. So that number also, if you see it, would actually come down. So this is where we are, and we track this very, very carefully. So the idea is that right through the life of the entity who comes under our jurisdiction, there should be ease of doing business, and we should ensure that we are accountable for what we are doing, and wherever we are not accepting, there is a specific reason that we articulate as to why we are not accepting something that the industry has requested. And this is our transparency to say that this is our open report card, this is what we will show and disclose, just as we ask for transparency from the rest of the industry. This was actually meant to be in lighter vein, that while we try and make your life a lot easier right through your life, in case there are violations, we are trying to make settlement also easier. So when we do catch you doing bad things and we allege violations, we want to make sure that it's just easier for you to come. We have a calculator sitting on our website. You fill in the blanks and you know how much is your settlement amount. And so even the settlement amount, we want to make your life a bit easier in concluding that. When we talk about the Industry Standards Forum, I would like to highlight that the first actual Industry Standards Forum that was a success was the one with the mutual funds, which was really through AMFI. That is what inspired us to set it up for the listed companies. And we subsequently set up a large number of other industry standard fora as well. And the amazing success, if I look at the brokers, the three large broking associations came together, Kamlesh Bhai is smiling, came together, and I can't tell you with what passion, with what maturity, and with what, balance. The forum has sifted through over 100 suggestions on bringing the standards, and there has been, I think, almost 24 which are already, recommended by them. A large number of those, I think more than 50% or 60% are implemented, and the balance are under various stages of active consideration. But I think what I would like to point out is every Saturday, senior people from the industry, every Saturday they would meet for 2 to 3 hours to have discussions, and the following Monday they would have discussions with the exchanges and clearing corps, and the following Wednesday they would come and talk to us, and item after item after, and such sensible suggestions I cannot tell you. I mean, it was like we used to look at it and say, अरे ये पहले हमको फीडबैक आ जाता तो हम पहले ही कर देते. I mean, they were just so sensible. Okay. So I would really say that to us, this process of the Industry Standards Forum across the spectrum has been such a learning experience for us, and we are so delighted with the way it's working, and which is why we have now taken it to our board to make it a formal part of our regulatory architecture. And therefore, when I look at Markets 2.0, Viksit Bharat 2.0, Regulator 2.0, what is it that you should expect from us? I think the first and most important theme that will dominate is we want to think with you, for you, and together. That is the way in which that thought process will really manifest in new ideas, new products. We have a goal internally, part of our KRAs, is the developmental role that was being mentioned earlier. So whether it is creating new institutions, you will very soon see something called the Performance Validation Agency. NSE has done some brilliant work. I was just gobsmacked when I saw the work that they have done. Performance Validation Agency, so that any person coming into the market who wants to make a claim about performance, whether it is an algo provider, whether it is a investment advisor, whether it is a research analyst, in future the PMS and the mutual funds today have their own audited version, but just brilliant use of technology and therefore ability to scale and therefore to offer that service at an extremely low cost. All of this was just an amazing piece of delivery. So very soon you'll see a new institution in the market called Performance Validation Agency. We are working with some more market participants on something called Benchmarking Agency. We are delighted with the work. I cannot tell you the quality of work leveraging technology. We are starting in the REITs and hybrid space, which will allow investors to really compare across REITs and separately across InvITs, to be able to compare performance and to simplify and demystify investment in hybrids. It's just brilliant work. So creating these new institutions, we already had last year, Honorable Finance Minister inaugurated the backstop facility for mutual funds. We have the, the Limited Purpose Clearing Corporation for the corporate bond repo market. I'm delighted that from zero, we didn't have a repo market, right, in corporate bonds. It just did not exist. And today we hit anywhere between 15 to 20,000 crores every month. Now this is the creation of an institution, right? So creation of new institutions, creation of new asset classes. Many of you have seen our paper on the new asset class, which sits somewhere in between a mutual fund and a PMS. New products, I talked about this combo product for the capital market today, which is the right way to preferential allotment. All of this innovation is really possible because of the fact that we co-create with industry. This is a theme that we will continue. Version 2.0 will only strengthen the spirit of co-creation so that we have innovation. Like I promised in the very first time that I came here, Sebi is not wedded to anything. There is no dogma. There is only data. And you have seen, I have been personally questioned on, but 3 years ago you said this and now you're saying this. I'm saying yes, because there is no dogma. Because when the data changes, we change our mind. So we are really committed that there will be no dogma. We are open for discussion if the data supports it. Lastly, I would say that the theme of technology, which is underlying the entire country today, will continue to drive Sebi. And I would urge that all the market participants adopt RegTech, because we are rapidly adopting SupTech, right? A lot of the supervision we now do, and it's not just market surveillance, it's inspection and all of that is now using technology. So it needs to be that if you have to be proactive and know what's happening in your setup before we get to know, right? We show up once a quarter, once a year, and with technology, we know what's happening in your place. If you don't have technology, you will be surprised by what we dig up, right? So we have often had this rather humorous conversation where we go to somebody and say, do you know, aapke yahan ye chal raha hai? And the senior people don't know it because they've not put those systems in place. But I think the important thing now is SupTech is already here. So RegTech needs to get here very, very quickly. So just like everyone invests in technology to serve the customer, it is our wish and our hope that they will rapidly adopt technology for RegTech so that, what is it? It's purposive. It's not just for the sake of adopting technology, but so that compliance becomes like a soft hum in the background which just happens, and the bandwidth and the intellect of our people and the entrepreneurial spirit of people is really released to do productive, value-adding work in their organizations and in the economy. Compliance should just hum in the background. And for that, what is essential is the rules have to be known and they have to be technology enabled. And that is what we are seeking to do. So I'm looking forward to, Anish, that the RegTech solution that FICCI has come up with, there's been a lot of progress on it. So sometime soon, I am hoping that you will tell me that 80% of your members have now deployed it. So in summary, what can you expect from the regulator is this, that we will expect the ecosystem to deploy technology more and more so that quality, including risk management, improves, efficiency improves, speed improves, and cost comes down. Why is it important that this cost comes down? Because finally, we want inclusion and we want a Viksit Bharat. Thank you.
Thank you so much, ma'am. It's always so very inspiring to hear you and the tremendous and the range of work being done by the regulator, and most importantly, the reiteration that you will continue to work with industry, with all the stakeholders. And I do remember you did talk about that there are no dogmas and you continue to stand by it. So thank you so much, ma'am. Once again, a round of applause for what a wonderful insights that we have from the work that the Sebi is doing. Ma'am has kindly agreed to take some questions, but from the market players and not from the media. So I will request Sunil to moderate the Q&A, please.
We have time for a couple of questions. So before people start thinking, ma'am, maybe if I can start with the first one, and then we'll go to participants and take their questions. So on combo, as I understood, you are saying that you combine pref and rights issue and you don't need discard the bankers, right? And the lighter way, I don't think we have made any recommendation where my business plan is changing. So more? Yeah.
Very many of the innovations and the bandishes come from industry. But we knew that this one will not come from industry. So this is completely homegrown by Sebi staff because we knew this will not come from the merchant bankers.
No, I think in all goodness we need to run this with the industry forum. So, but more substantive on this split of the prospectus, demystifying prospectus. I think that's a brilliant idea. If we can add at some point of time, once we get comfortable, we can add one more. What we had talked about, ma'am, is a green channel. So if once you're comfortable with demystified prospectus, then it can just auto clear without just going through the scrutiny. Maybe we'll reach to that stage at some point of time.
See, it won't be necessary, Sunil, because we are now developing the technology using artificial intelligence. So we've already implemented artificial intelligence within Sebi for processing public documents. For instance, let's say a REIT annual report or a INVIT annual report. So earlier, what a human being used to read and see whether the annual report is in compliance with our norms, etc. Now AI does that, and the officer validates it and also does some manual check. But 80% of the work is really done through AI. So we are working, as we speak, we are working on AI-based processing of IPO documents. So we should be like this, but with the assurance to the investor we've looked at it. So your normal track will be so fast, you don't need a fast track.
Brilliant. Just on...
Provided the document is good.
Sunil is speechless. I haven't seen him speechless before.
No, I tell you why. I want to share this openly, this experience. So we banker always think that, we know more. So I took a CEO of a AI company to meet Sebi. And after first 5 minutes of conversation, the team walked in, and the kind of stuff which they explained to this AI company CEO, he walked out of the meeting and he said, I don't think I can tell anything new to these people. They know more than I know.
No. That's not true. We learned a lot that day and we still have a lot to learn. But yes, we have, our staff are extremely competent and they are very tech savvy, very data savvy. And after 4 or 5 years of being in Sebi, they get, the domain. So their ability to do this, it is so fast. Each project is these days, the small ones take about 2 to 3 weeks. That's all. 2 to 3 weeks. The larger ones like the IPO, because there's so many permutations, combinations, and so many compliances. I think I've been told by December or something, they said that they'll give me the first cut. So it's taking. But our kids are really fantastic.
If I come to, I'm not able to see from here. Anyone from, I can see a hand there. Yeah, please go ahead. The mic will reach you. If you can introduce yourself, sir, and then ask your question.
Myself, Vinod Kumar Goel. I am National President of NME, which is the biggest body of the Brokers Association. Madam, you are speaking well, you are doing well, your actions are actually hampering us. You are acting so fast that every month there is a circular. So, if you remember, Viksit Bharat, along with that, our Prime Minister is saying that there should be ease of living also. But that is lacking. These two things are not going in coordination. Like I say, madam, this ease of living, now inspection. Take the inspection. NSE does inspection, BSE does inspection, Sebi does inspection. Can't three be combined for ease of living? This is one thing.
No, I completely buy your point. My understanding was that we have actually combined the NSE, BSE, Depository and Sebi inspections into one. That is my understanding. Is that right? Yeah. So that has been combined. This was done about 4 or 5 years ago. The other point about, circulars, I think that 3 things are happening. One is that the perception, the number of circulars has not gone up that much. The perception of number of circulars going up has gone up because earlier our consultation rate was quite low. In the first decade, roughly, of SEBI's existence, our consultation rate was 7%. In the next decade, it became about 15%. In the last 2-3 years, it's at 33%, and I think if I look now, it will be about 50%. So the perception, because you're saying every day, because the public consultation is coming up, because we want that view. You see, our fundamental view is that the markets are so complex today that we will be very foolish to bring a circular which has not heard the perspective of everybody, because there could be something we have missed. Life is so complex. So we are consulting more. And when we consult, what happens is that the media also talks about it, everybody. So, पहले क्या होता था वो, हम थोड़ा अपनी maybe exchanges को बुला लिया, depositories को बुला लिया, वो अपनी खिचड़ी पका ली और वो हो जाता था. So now, because of the very extensive public engagement and all of that, first of all, it appears that we are doing more. Actually, the consultation rate has gone up. Imagine from 7% to 50%. The second thing is that, again, as was said, that of all the circulars that we are doing, I think you mentioned a number of 33%. Actually, when we do an analysis, when we combine ease of doing business and development, it's almost 44%. So almost half of the circulars we are bringing out is for ease of doing business and development. New product, new this, as well as ease of doing business. So that's on that side. The side which is about regulation, you see how dynamic the market is. Every day something new and interesting is happening. Now, even with our pace, we are one step behind the market. We don't want to be 5 steps behind the market. So whenever someone says to me, why don't you say, okay, twice a year we'll come out with new circulars and regulations. I say, okay. So all market innovation that is happening, you also do twice a year. Because our regulation keeps pace with the dynamism of the market. If the market wants to stay static for 6 months, we'll also stay static for 6 months. But we don't want to be in a place where the regulator is 5 steps behind the market and then trying to catch up. Then we'll be told, ये तो हिंदी मूवी में पुलिस की तरह है कि वो हीरो और विलन लड़ झगड़ लेते हैं, उसके बाद पुलिस आती है. So we don't want to be that. So at least थोड़ी देर में तो हमको we should show up.
Gentlemen.
Hi, good morning. I wish there was a gold medal for regulators. We would have had a gold medal for India very clearly. My name is Royston. I'm
Thank
from Grameen, the Nobel Peace Prize group of entities. One of the things that I want to look at is the bottom up. While a lot of us have talked about how India is number 2 and 3 globally, there is a challenge globally of the Sustainable Development Goals. We need some $40 trillion to come in there. Ashish talked about we can grow rich before we go old as a country. There's a way we can also grow good before we grow old. There are 2 pieces of the Sebi regulation that talk to that. One is the Social Venture Fund, and the other one is the Social Stock Exchange. I'm excited to see if we can really break silos in terms of MCA and RBI. There's a PSL, there's a Section 135 under MCA, there's a Social Sebi Venture Fund. All of them talk about development, but with different silos. Is there a way we can crowd in capital and become really the world's leading innovator for funds that cut across this? So a CSR can actually be a guarantee provider for funds, or some way of de-risking both domestic and international pools. So there's a huge amount of creativity that's possible. There's a huge opportunity. At least India needs $6 trillion for the SDGs in my estimate. How do we, and there's a lot happening from the top down in terms of large corporates. So there's necessarily attention that needs to go there. But parallelly, is there a way to also look at ways to quickly broad base that pool? Thank you.
I think you're very right. It's certainly a need. I think that 2 things happen. It's like the difference between a race that an individual runs versus a race which is a 3-legged race and a 5-legged race and a 7-legged race. So the speed of a 7-legged race will always be lower than a single runner, right? So we need to be conscious that when multiple entities are involved, multiple things, decision makers, because they all come with their own perspective. So necessarily the speed of reform is slower in a 7-legged race than a single race. Having said that, I think the beauty is that a forum like FICCI is actually ideally placed, and we had some of that discussion in the closed room discussion, that areas which are like this, somewhat complex and multidimensional, fora like FICCI can really play a very important role in making sure that that consistent feedback goes to all relevant stakeholders.
Ma'am, in the interest of time, I think we will have to close. Thank you. But very briefly,
मैडम 3 दिन पहले एक सर्कुलर आया है डेरिवेटिव्स के ऊपर, और हमारी लाइफ हिल गई है, फ्रेंकली बताऊं, क्योंकि हमने बहुत इन्वेस्टमेंट किए हैं, बहुत रिक्रूटमेंट किए हैं और कॉन्स्टेंटली उसके ऊपर काम किए हैं, पर क्योंकि आप भी आपकी जगह सही हो कि आपको लगता है कि भाई इन्वेस्टर्स जो ट्रेड कर रहे हैं ऑप्शंस में वो अपने पैसे गंवा रहे हैं, तो ये भी सही है। पर पैरेलली ये भी सही है कि पहली बार लाइफ में ऐसा हुआ है कि इंडिया को लोग एक ऑप्शंस ट्रेडिंग की हब तरह देख रहे हैं। मैं अभी एक लंदन इवेंट में था तो बहुत से वर्ल्ड ट्रेडर सोच रहे हैं कि हम इंडिया शिफ्ट हुए या इंडिया काम करना शुरू करें। तो ये फर्स्ट टाइम ये इवेंट हुई है अपने लिए कि हम वर्ल्ड में एज ए लीडर देख रहे हैं, लोग देख रहे हैं। तो हमको लगता है कि यहाँ पे एक बार ब्रोकर्स के साथ, एक्सचेंज के साथ और थोड़े बहुत जो भी स्मार्ट लोग हैं उनके साथ बैठ के थोड़ा डिस्कस करने के बाद कोई डिस्कशन या कोई पॉइंट डिसीजन लिया जाए, क्योंकि बहुत इन्वेस्टमेंट हम कर चुके हैं ये एरिया में, और बहुत इंडिया में बहुत से प्रोफेशनल ट्रेडर्स हैं जो बहुत अच्छे से काम कर रहे हैं सिंस 15 साल से। तो ये उसको बहुत बड़ा इम्पैक्ट आ सकता है।
कोई स्पेसिफिक पॉइंट है, यदि कोई क्वेश्चन है?
नहीं, आई थिंक आपका कहना सही है कि सोच विचार की करके ही कोई डिसीजन लेनी चाहिए, एंड आई वुड एग्री। बट ये तो हमने अभी कंसल्टेशन पेपर इशू किया है जो
पर मैडम वो कंसल्टेशन के बाद एक सर्कुलर भी है जो सीधा आपने वही आप देखोगे ना इसमें, तो एक सर्कुलर भी है जो एक्शन को आपने भेजा है कि भाई ये बाद में ऐसे सर्कुलर चला जाएगा।
नहीं, ये ड्राफ्ट सर्कुलर है फॉर पब्लिक कंसल्टेशन।
ओके।
सो अभी तो विचार होगा, उस पे डिस्कशन होगा, तभी हम लोग आगे बढ़ेंगे।
एक मिनट कमलेश जी।
और देयर इज अ टाइम, डू यू परमिट मी?
बोलिए कमलेश में।
With your permission.
Yes.
Madam, last 3 years we have seen a lot of reforms and compliments to Sebi for that. Especially, pledge repledge, whereby, securities are not in broker's account, upstreaming of clients' fund, upfront margining system, ISF, and list is many more. And all this has helped to a great extent developing the market. We understand your concern about the retail investors. They should not lose money. We can have product criteria or product suitability criteria for the FNO segment. Madam, just to give you an example, for whatever reason, I'm not blaming any authority, but currency market was developed after, putting 15, 20 years of efforts. And with one circular, it went away. And I fear that the derivative market also may get exported to an extent. So we do appreciate your concern about the retail investors, and we are fully with you on that front, just to see that, the market grows in a proper manner. Thank you.
Thank you. And Kamlesh bhai, there is a separate session on FNO, so we will have more chance for interaction. Yeah, there is a session during the day. आप यहाँ रहेंगे, you should attend that session. May I invite the co-chair of Capital Market Committee and MD CEO of ICICI Securities, Vijay Chandok.
Thank you very much, Sunil. All the esteemed speakers, the distinguished guests in the audience, the members from media, ladies and gentlemen, we draw curtains to this inaugural address to the 21st edition of the FICCI Capital Market Conference, and I would like to thank all of you for making this a very successful event. I am told that this is a record this year in terms of number of participants. The achievements that we've had in the last 1 year is clearly a testament of the power of collaboration and shared work that has been happening in the industry. We've just heard some very insightful presentations over the last hour or so, some very interesting conversations and questions from our distinguished dignitaries. And of course, a very impactful presentation from our very dynamic chairperson from Sebi. And like every time, she leaves a mark when she speaks. She's always been a big vocal proponent of transparency, enhancing, building trust, increasing accessibility. And today she has added a new dimension, innovation, and if I can say so, parameterization to this whole process of regulation. And I share the sentiment expressed by Sunil. I hope this is not another subtle message that comes out, particularly when I saw that new product, that there is no role for merchant bankers. I don't know if more and more of this parameterization will lead to that. The speakers before me have outlined the market's growth potential quite eloquently, and some of the enablers that they spoke about are the massive growth in the capital markets thanks to a deepening of it, a lot of discussion around ease of doing business, and a lot of discussion around how technology is enabling India, all of which we believe is clearly ingredient in making and realizing this vision of Viksit Bharat. I'll just take 2 minutes to commend the regulator on its ongoing initiatives to improve market transparency and investor protection and enhance ease of business, as there was extensive discussion around that. And I also want to take this opportunity to acknowledge and thank the role played by NSE as an important player in that industry standards forum, which in a way has enabled this ease of business. And I can really vouch for it personally because I've been fortunate to be a member of one of the expert committees of the various committees that have been formed by Sebi on representing FICCI on ease of doing business, harmonization of LODR and ICDR. And I must say that these discussions have happened in a very, very constructive manner and very deliberated manner. And some of these suggestions, and there was a chart which the chairperson put out, are at various stages of getting implemented. Some of them actually have already started hitting the ground. Apart from, the things that were spelled out, I specifically want to highlight three developments that really have added stature and transparency and reduced risk in the markets. I think the one is this T+1 settlement and the optionally available T+0 settlement. It is simply path breaking and something which is first of its kind anywhere in the world. I think that's truly a testament to the forward looking stance taken by Sebi. The other very notable point I want to bring out is the, if I can call it, the ASBA model for secondary market. It's a very friendly feature for market investors. And coming soon is the direct settlement of securities, which is further going to de-risk the market. I've just named three. There are so many more that we can talk about. The recent months has seen a spectacular growth, and Ashish ji highlighted India now becoming the fourth largest, if you were to ignore Bloomberg, largest market. And therefore, I would say a lot has been done because of all the transparency, trust, capital formation that has been happening thanks to a very well-controlled, well-regulated Indian capital market system. But as we look forward, a lot has been achieved and a lot more has to be done. Three areas which we thought which will need our collective look in, I think, as there has been greater access, greater use of platforms, greater use of technologies, cyber risk and cyber security. We are beginning to see shades of that coming into our markets. That needs to be really fought very vigorously by all of us. While digitization and the digital infrastructure has really transformed financial inclusion for us, but I also think that there is a digital divide that one will need to address. The people who are, don't have access to digital technology yet or are digitally less literate. I think there's work to be done in that area. And of course, coming soon or probably come already is data privacy. That's another area that we will all have to work together as we move forward. So, and finally, I would like to conclude by saying that with more and more money going into the market, we also have a role to play in managing risks for the newly entered investors into the market. I'll end by saying what Chairperson said. We've done a lot of work. More work needs to be done on some of the areas that we all discussed here. And we do it in the fashion of working collaboratively, as she said, with you, for you, and together for us. Thank you very much, ladies and gentlemen, for your presence.
Thank you, ladies and gentlemen. That is the wrap of the inaugural session. We would be missing out on the opportunity if we don't get all the gentlemen and the ladies for a quick photo op, please. A massive round of applause, ladies and gentlemen, for this fantastic inaugural session. The Atma of the conference, the Sherpa of the conference, and all the distinguished dignitaries on the dais. Thank you. So coming up next is the session on strengthening and regulating market infrastructure, where we will be joined by Mr. Kamlesh Chandravarshni, whole-time member SEBI,